Hi, and welcome to this edition of the Financial Education Fridays. And my name is Jim, and this particular uh, Friday, we're going to be talking about preparing a personal budget. One of the students, Pete Barone, left a comment asking about any insights in preparing a personal budget. So what I'm going to do here is I'm just going to give you some general ideas about how I go about it and a little bit of the background. Um, Bear with me because I'm going to have to bounce around here between different software programs. So, uh, if you know it, if you ever notice, I pretty much just wing it. So let's get started here, okay? All right. When we talk about for I realize that a lot of people will be watching this, can watch this video, but the vast majority of us are in the business curriculum because obviously this is the business group and we all have financial accounting. Okay. Now, the principles in financial accounting equally apply not only for a business but to personal finances. All right. For example, let me get the pen here. All right. Um, we're all taught that your assets equals your liabilities plus owner's equity, right? Assets are things that we own, right? Cars, building, land, equipment, stuff like that. Liabilities are things we owe, mortgages, notes, accounts payable. And the difference between the two becomes our owner's equity or just plain equity, right? So in your personal life, you have assets, you have a car, you have a house. You have liabilities, the payment on the car, payment on the house, the mortgage on the house, and the difference between the two becomes your owner's equity. If you rearrange this uh, formula just real quick, we want to isolate the equity on the left. So if we take assets, and if we move the liabilities to the other side of the equal sign, it's a minus, all right, the liabilities, which leaves the equity on the other side. So assets minus liabilities gives us our owner's equity or our equity, our net worth, all right, in our personal life. Same in the business. If we sell off all of our assets, then we pay off all of our liabilities. What we have left over becomes our equity. Okay. Now, we also have our revenues less our expenses, which gives us a profit or loss. And that happens in a business on every accounting period. Whether let's just assume it's a monthly period. So during the entire course of the month, we have we make sales, we take out our expenses, and we're left with a profit or loss. Let's say we have a profit. Okay, well that profit ends up being a part of our equity. It increases our net worth. Okay, so this is no different in our personal life. We have revenue. Let's say for the vast majority of us, we have a job, so we get revenue. Then we have our expenses. We food, house, mortgage, rent, clothing, car expense, whatever have you, and whatever we have left over is our profit or loss, and that increases or decreases our equity accordingly. Okay, so with that said, let me switch software here. Here we have I have an Excel spreadsheet, and I'm going to do this on here just because it'll be easier to do the math, okay? All right, let's notice that what we're talking about here is, we all own a car, we have a house, whatever we have for our assets, and whatever we have for our liabilities, for the most amount remain fixed. If you buy something, you take that into consideration. If you have, you end up having to pay on it, you take that into consideration. Right? But so really what we're talking about in a personal budget is our revenues and our expenses, what we make and what goes out, right? And so just like an income statement, we're going to list things the same exact way. So let's start off here and we're going to make this our revenue section, okay? Well, what do we have for revenue? A paycheck, all right? And let's just make some assumptions here just to get the general idea. Let's say we clear our net pay, all right, is $1,000 a week, all right? Net pay, don't mind me, all right? So let's say it's $1,000, all right? And that happens every other week. So during the course of the month, right, we have, you know, we're going to earn a total of $2,000. Okay. Now, when you're as an insight into personal budgets, you can't just immediately look at 1 month. Okay, you have to look at several months in order to get a good standard. I mean, for example, if you're paid every other week, well, twice a year, you know, I mean, you'll end up getting 3 paychecks in a month. Okay, so, the way I view that is that's just an extra paycheck. That's just like a bonus. I don't even worry about that. I always kind of like base my uh, revenue on uh, 2 weeks of pay. I mean, sorry, 2 paychecks an entire month. And you see these things, and if you have a baseline, then you can think about variances, things that happen off the wall, like getting a third paycheck in a month. Okay. I mean, that third paycheck, if you have the standard same expenses every single month, getting that third paycheck should be extra cash. Okay, and really that extra cash, if you're, depending upon what you want to do with it. In my case, I take that whole paycheck and I invest it. Right, so it doesn't affect my lifestyle one way or another. Okay, other than I've increased my investments. Okay, so we start out here, right, back to our spreadsheet and the thinking behind creating the budget. We sit and we say, okay, how much money do I make in a month? And again, this can change depending upon the person. I mean, for example, if you notice, I post on the student community, $34 free money, $80 free money, right? If I'm making an extra $40 a week, okay, well then I can say, okay, I'll add that in, all right? Extra income, and $40 a week at times 4 weeks is $160. Okay, so now my my monthly income, my total monthly income, is $2,160. If I go past that, I don't have, that's my spendable cash. Anything I do beyond that, I can't afford, right? And people have no clue. A lot of people have no clue as to where they sit within that amount right there. Okay, um, let me. That's an important figure, right there. Okay, so now let's start looking at our expenses. Well, a lot of us have things like rent, and I'm just going to make stuff up here. Okay, um, just to give an idea here. Let's say rent for the month is $800. Right, yours could be more, yours could be less. All right. Let's say I have a car payment, and that's say $300. Okay, and let's say I have utilities, let's say electric bill, and let's just say that's runs right around $70. Let's say I have, let's see here, I keep my expenses pretty lean, so bear with me as I try to think of ideas here. Okay, rent, a car payment, oh, food, right? Have food, all right? Let's say you spend $600 a month, right, on food. Let's say you have a hobby, right, where you have a subscription. And let's say, oops, geez, I can't spell for anything today. Script, geez, that was pretty bad. A hobby subscription. And let's say that's $30 a month. And let's say I have I don't know, oh, yeah, cable. Gotta have television, right? Or let's just call it television. And let's say that happens to run $150 a month. Let's say hobby subscription. Let's say, I don't know, spending money, we'll just call it. And let's say you give yourself, say, spending money of say $20 a week. Okay, that you just flitter away on coffee or whatever have you. Okay, so that ends up being, 20 times 4 is $80. Okay, uh, let's see here. Spending money. Um, I don't know. All right, let's stop there. But you get the idea. What you're doing is you're going to watch over the course of several months in order to pay attention to exactly how much you are spending. I mean, food. I just guesstimated at food at $600. But what I would do is I would go to the grocery store and I would keep all of those receipts. Okay. So, over the course of say 3 months, which, then I can say, okay, I've got, you know, $1,800, in receipts here. Well, that means my food is, divided by 3 months. That means I'm spending $600 a month on food. Let's say I also go out for dining. Right? Let's say I spend $15 at KFC on Thursdays, and I spend $20 at Burger King on Saturdays because because of work schedule or whatever have you. All right. Instead of coming home and eating, I go to KFC and I go to Burger King. Well, that's $25 a week, and I do that 4 times a month. That's $100. Okay. Uh, you know, what you're doing is you're paying attention to these things. You're every little penny that goes out. I mean, you don't have to do this forever. Even though me personally, I actually do still do it. Okay, I keep, I have Quicken. Okay, and every time, there's a transaction, but then again, I'm an accountant, so every transaction I'm recording it, and I know exactly how much cash is going out and how much cash I've got coming in, and I'm able to look and say, okay, here's how much I spent on food this month. Here's how much I spent on dining this month, and so on and so forth. Okay. Um, but that's what you need to do in order to know and get a baseline for your expenses. All right, so let's just tally those up there. Okay. In this case here, all right, um, now this is where your net worth comes in. How you deal with your net worth. All right. I have a net pay, take home cash. It's not what, let's say I earn $1,300 for that pay period, and after taxes, I take home 1,000. Okay. Well, I have $2,160 of spendable income. Okay. But based upon my expenses, all right, I have $2,120, right? Now, you might think, oh, okay, yeah, this number, my expenses are less than my revenue, which is good. Okay. I mean, that's what you want, but really, if you notice, you only have $40 in difference. Okay. I have equal this minus this, and I only have $40 extra at the end of the month. I mean, honestly, over 30 days, that's, a dollar a day difference. Okay, just roughly a dollar a day difference. Are you going to notice that? No, you're not. Okay, you're just going about your merry old business, and you're paying things. Okay, you're going into the grocery store and you're spending the money. You had that subscription that was 20 bucks, right? That's automatically deducted from your bank account because you have it set up as an automatic payment in PayPal. Um, you're spending money. You take that $20, and a lot of us don't even think about the $20. We just go and we just spend, and we really don't know what we're spending it on. Okay. Um, Dining. Yeah, okay. I went to KFC and I went to Burger King, but now it's Monday, and I want to go out with the wife and kids, and there's an extra $60 or $70 in dining that you're not paying attention to. Okay. Well, if that was an extra $60, right? What happened to that 40? All right, you just spent 60 more dollars than the allotted 100. You don't have enough money, right? Someplace else you're short. Okay, now you start playing games. Okay, and that's what credit. Oh, geez, I didn't even add credit card bills. Oh, wow. Okay, so I've seen people go into Burger King and charge their Burger King on a credit card, right? Well, credit card is a liability. It's something you owe. I mean, where does that money going to come from? All right. You don't have enough money. All right. So this is how you take a first look at your your revenues and expenses. And in this case here, like I said, we're $40 to the good. However, you really do need to start thinking about what is actually going on here. Okay, for example, extra income was $160. Now, like I said, I just kind of took that at, oh, well, I make $40 a week, okay, times 4 weeks in a month, and that's 160. Well, yeah, that works good in the summertime, spring, summer, and fall. But in the wintertime, when it's freezing cold and it's snowing out there, I don't get 160. I get zero. I'm not out doing that. So now, if I got rid of that, okay, now my total income is only $2,000 for the month. And if I'm still spending the same exact way as I was before, I'm short $120. Where am I going to get that from? Why I can't pay this bill, why I don't have that. Because most of us are just winging it and we have no idea and no clue. So we track all of this stuff, we set it up, and then we take a good hard look at things. I mean, you have to live within your budget. All right. If you don't, then you're borrowing on credit cards, putting yourself more into debt, borrowing here, borrowing there, and before you know it, you're dead in the water. Okay. So let's take a look at just some of our expenses here. I mean, rent, you're not going to be able to do anything about. Okay. Your car payment, you're not going to do anything about. Another thing that pops into mind here with car payment. What if, what we haven't taken into consideration is car insurance. Okay. Now, let's take a look at car insurance. I'm going to change the screen here. I'm going to erase all of this. Okay, come on, erase. Okay, now, car insurance, all right? Most of us, all right, I'm just going to use round numbers. Let's say your insurance expense is $600 for the year, right? That's per year. Okay, that's if you pay it all at one time. All right, I have Progressive. I could pay my car insurance once a year. All right, and if I pay it once a year, and I'm just picking a number here, so it's 600. Really, um, if I pay that full amount, then I don't have to pay my insurance all year. Well, what happens? Let's say I have to make that payment on February 1st, right? Right. Well, where am I going to get the $600? I mean, you just saw from the other slide, I only had 40 spendable dollars. So where am I going to get the extra 600 all of a sudden, at that time? You say, oh, income taxes. Oh, yeah, right. Uh-huh. Yeah, I know what happens to your income taxes. Okay. So you have to, if you want to make that payment, all right, if you want to pay the $600, we have to take that into consideration. So 600 divided by 12 months in a year is $50 a month, okay, that we have to put into our budget, okay? If not, if we don't want to pay the 600, I mean, Progressive says, okay, yeah, you can pay $75 a month, right? Obviously, you're paying more because why? You're borrowing their money, okay? So let's go back and let's just say that we want to take the option of paying the 600 because why? Instead of paying the 75, if we pay the 50, that's $25 a month times 12 a month. That's an extra $300 we save on our insurance. Okay, so it behooves me to actually pay the $50. Save the $50 each month, and so in order to be able to pay the 600. Okay, so let's go back to our spreadsheet and let's stick in the $50 there. Okay. Oh, what about that? Gas. Insert gas for the car, right? I pay easily $50 a week for gas, so that's $200 more that I have to fork out. You notice how things are just piling up here, and right now I'm sitting there going, well, I'm $370 short. Okay, you have one of two choices here. You can or both. You have three choices. One, you increase your income, get a part-time job, um, go sell something in a flea market, in order to make extra money. Uh, you know, you need to do whatever it is that you need to do in order to make the extra income, in order to meet your budget. Okay, so you can increase your revenues, or you can decrease your expenses, or you can do both, increase revenue and decrease expenses. So let's take a look at decreasing expenses a little bit more. Okay, this hobby subscription. That's what Rich Dad Poor Dad Robert Kiyosaki calls a doodad, right? Which is one of those things you flitter away. Hey, you don't need that hobby subscription. Okay, and go to the library, read a book. Watch a YouTube video. All right, you don't need the hobby subscription. Right, get rid of it. TV. Who spends $150 on TV? I'm sorry. I looked at my TV bill, and this isn't a personal opinion, but out it went. Okay. I went to Best Buy and bought a Roku unit, ROKU, right? Hooked it up to my TV, and I get Netflix for $8 a month. I don't watch TV. I don't need to watch the news. I don't need to be glued to somebody else's life. I'm living vicariously through the television set. No, I'm out living my own personal life. I don't need the soap operas and the drama and the bad news and, all the other kind of stuff that goes on out in the world. It has nothing to do with me. So why am I, watching the soap opera stuff? I'm living my life. Okay. And in order to do that, I just hacked off $140. Okay. Uh, okay, let's see, dining. All right. Yeah, dining. $100 a month. There was KFC and Burger King. I'm not saying don't do it, but be judicious about it. What if I just say, okay, I really like KFC, and on Thursdays I'm really beat, and so I go and get their chicken wings. All right, fine. You have a reasonable excuse, but do I need to go to Burger King? Well, no. So that was $10. Um, so let's say, get rid of $40 more out of that because I'm not going to Burger King. All right. Um, I can't do anything about my car insurance. I can't do anything about my gas, but I can do something about my food. Okay. If you're paying attention to your food bills, right? Hey, I was, me personally, I was buying, look at um, let's go back to, let's go back here and um, a bottle of Pepsi. Let me get this here, right? Pepsi. Where I am is retail is $1.89. All right, and that's for a 2-liter bottle. Okay, I've seen in the convenience stores a 1-liter bottle being $2, and people are buying it. Okay, well, me personally, I was buying one 2-liter bottle for each day of the month. That's 30 bottles at $2. I'm going to round this to $2. That's $60 a month I was spending on soda. Okay, do I need that much soda for something that's rotting? Put a nail in a bottle of Pepsi and wait a couple of days and see what happens to it. Okay, and then you'll stop drinking Pepsi. Okay, so if I swapped out Pepsi and I went to RC Cola, it's a brand that we have where I live, and usually that's $1 for a 2-liter bottle. Okay, so and I was buying one of those every day, so now I'm spending $30 on soda. Okay, that's better than the 60, right? But do I really need the RC? Do I need that soda? Everybody likes to treat myself, but now I kind of like say, okay, maybe I'll buy one bottle a week and have it with popcorn on weekends or with that hamburger. Okay, so I'm really only spending like $5 a month on soda. All right, that's a hell of a lot better than $60. So I've lopped off of my food bill $55 from soda. Okay, I look at other things. I was buying, let me get my eraser here. Okay, I was buying things like potato chips, a bag of potato chips. They go for 250 a bag, right? and I would eat one of those every 2 days. So if that's every 2 days, there's 30 days in a month, and I eat one every 2 days. That means 15 days a month times 250, right? That's 30. I'm not gonna. That's seven, so that's like $37 roughly. Okay, that's $37 on potato chips I was spending a month. Right? Do I need that much in potato chips? You know, call it whatever you want. Popcorn, Doritos, whatever. Okay. No, I don't. Right. I could just as easily go and eat watermelon right now. I spend, you know, uh, and this is a lot. A watermelon I buy is $7, and that watermelon can last me 2 weeks, and that's $15. So I saved $25. And what I've done is I've replaced something healthy with something unhealthy, and I saved $25. So now I've saved 25 more dollars. So I'm up to 80 that I've saved. Okay, and that's just making a change from soda and potato chips. All right, so let me go back to my spreadsheet here. And now I'm going to spend $80 less. So instead of 600, I'm only going to spend 520. Okay, not bad. I'm down to 88 bucks. Okay, there's other things that I can do to change my food situation. Okay, and like I said, if I can increase my net income, I mean, I had 160 in there because 9 months out of the year I am earning $160 a month free money. Okay. Um, Notice I stuck it in there, and now it puts me in a positive situation. Okay. Now, granted, that's not for 3 months, and this is what I mean by, thinking things through. Remember, twice a year, I'm going to have an extra $1,000, right? Because of 3 paychecks in a month, right? If I go and I take and I say, okay, I have this times 12 months, that's how much in net pay I'm going to get a year. And if I do the same thing here, this is how much I have in expenses for the year, right? And if I go and I take this minus this, oh, I have $864 over the course of the year as spendable cash. Well, now what happens when I also add in this, the extra paychecks? All right. Oops, sorry, did that wrong. Delete. All right, let's see, equal this plus this plus this. Okay, so now I have, over the course of the year, I have an extra $2,864. Okay, that's doable, all right? Granted, things happen. Notice I don't have things like dentists that, if you have a deductible, medical, right? These are the things that you have to all think about, and everybody's situation is different, so you can't just say, here it is. You have to, work with what you have and think about all the events and things that happen in your life, and how you can, how you can afford it. Just on this simple example, yeah, I have $2,864, but every other year I have to spend $300 on new glasses, so that's $150 a year. That's an extra $10 a month that I could theoretically add in. Eyeglasses, right? And the thing about it is things like, the eyeglasses and the car insurance, when you set that aside in the bank account, your account starts building, and all of a sudden, you're looking at it, and you got, oh, I've got $1,000 in there, I've got $2,000 in there, and you think that's your, that's free money, you can spend it. No, that money's gone. Okay, it's just sitting there because come February 1st, you have to pay that car insurance. You pay that $600, and that reduces your balance down to what it should be. Okay, so this is I've been spending a half an hour now on this, but I hope it gives you some insight on how to create a personal budget. Okay, um, I pay attention to, oops, this area here. I budget that out, and I also budget my expenses out. Okay, and that gives me, how much I have on a monthly basis. And then you saw me go and say, okay, this is what I have on a yearly basis, because, as you think on, what you're going to have over the next month, but what about those events, those happenings, those transactions that happen 3 or 4 or 5 or 6 months from now, or, things that you don't think about, like I said, going to the dentist and having to, pull out $50, or getting the eyeglasses, okay? What about putting money aside for medical, that type of stuff, you have prescriptions that you have to fill and whatever have you. Right? So you look at it on a monthly basis, and then you also look at it on a yearly basis, and it gives you an idea as to where you stand, in your, cash-wise. Just looking at this, here I have $2,744 extra spendable cash a year. Okay, that increases your equity, that increases your net worth. What you do with it is up to you. All right. That $2,000, like I said right there, that goes straight into investments. I never see that. I consider that as an investment. So if I get rid of that, now I have an extra $700 a year. Well, what about if my car breaks down? Okay, you need new tires, $300, right? Again, if you don't have it, yeah, you're robbing from Peter to pay Paul, because you have this extra 50 sitting there building up every month, and after 6 months there's $300 extra there, and you say, well, I can take this to pay that. Well, what happens when February comes around and you've stolen from Peter to pay Paul? Who's going to pay the Pied Piper? Okay, you have to have the mindset of saying, yeah, this is the math. The math cannot be violated. Right? The math says I have this much in revenue. The math says I have this much in expenses. I can increase my revenue and I can decrease my expenses. Bottom line is I have to balance after everything is said and done. Right? And each and every one of us has to look at their own individual situation and take it for what it is. Okay. Hope this was useful to you, Peter, and anybody else who's watching this. I appreciate, your comment and wanting to know a little bit more about it. I've been, kind of like just throwing stuff up against the wall, things that, interest me and pop into my mind for these Financial Education Fridays. So if anybody else has any suggestions, feel free to post, and I'll see if I can't do a video for you. Okay. Thanks, and have a great day, and see you next Friday for Financial Education Fridays.